Welcome back to the Pangea Consulting video series on financial crime. In today's interconnected financial world, robust regulatory frameworks aren't just important, they are essential for combating financial crime. But with differing rules across international borders, achieving global compliance is now more complex and more critical than ever before. Much of today's anti-money laundering (AML) obligations are shaped by international standards set by the Financial Action Task Force, or FATF. These globally recognized guidelines serve as a universal benchmark, helping jurisdictions worldwide align their approaches to preventing money laundering, terrorist financing, and related financial threats. Within the European Union, the fourth and fifth AML directives represent significant leaps forward in the fight against financial crime. The fourth AML directive, adopted in 2015, marked a major shift towards a more risk-based approach. It mandated that financial institutions assess customer risk more thoroughly, conduct enhanced due diligence for high-risk clients, and ensure better identification of ultimate beneficial owners, UBOs, those individuals who ultimately control or profit from a company, even when hidden behind complex layers of ownership. Building on these foundations, the fifth AML directive, which came into effect in 2020, specifically addressed new and emerging threats. Most notably, it brought cryptocurrencies and digital assets under the scope of AML regulation for the first time in the EU, extending compliance requirements to crypto exchanges and wallet providers. Regulatory bodies worldwide are actively enforcing these evolving standards. In the UK, the Financial Conduct Authority (FCA), and in the US, the Securities and Exchange Commission (SEC) are playing key roles. They conduct rigorous audits, impose substantial penalties for non-compliance, and expect firms to maintain agile, forward-thinking compliance programs that can adapt to rapid changes. In this dynamic environment, compliance isn't just about avoiding fines. It's about building resilient systems that can keep pace with evolving global standards, detect emerging risks early, and crucially, maintain public trust. To summarize, global AML compliance is underpinned by shared standards like the FATF guidelines. However, the EU's fourth and fifth directives have significantly raised the bar by demanding greater transparency on ultimate beneficial owners, enhanced scrutiny for politically exposed persons (PEPs), and robust controls for cryptocurrency risks. Regulators such as the FCA and SEC are increasingly active, and the penalties for non-compliance are steadily growing. Therefore, institutions must remain agile, informed, and deeply committed to maintaining robust compliance systems. If you enjoyed this video, don't forget to like, share, and subscribe.